Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 4th of August. Bank of England's Super Thursday. Is it time for the big guns? The highlight today will be the Bank of England's first Super Thursday policy meeting following the Brexit referendum. At this gathering, alongside the rate decision and the meeting minutes, we also get the quarterly inflation report, which includes the bank's updated economic projections. Governor Carney will then present the report at a press conference followed by a Q&A session. The forecast is for the Monetary Policy Committee to cut the bank rate by 25 basis points to 0.25% by an 8-to-1 vote and to keep the size of its purchased assets unchanged at £375 billion. Market expectations for easing at this meeting are very high as well, with the implicit probability for a 25 basis point rate cut currently standing at 98%. Indeed, following Carney's post-referendum remarks that further easing may be warranted over the summer and the July meeting statement indicating that most members expect policy to be loosened in August, a move at this meeting appears almost certain. The nation's PMI data for July painted a very grim picture of how the UK economy performed in the post-referendum era, as all three indices now lie within their contractionary territories. Even though the softness in the PMIs may not necessarily translate into softness in other data, it definitely increases the pressure on policymakers to act now. Given that the rate reduction is already largely priced in, the key question now is whether policymakers will opt to deliver more. Will they choose to restart their asset purchase program? A sole 25 basis points cut could disappoint investors who expect more and may even cause the pound to rebound. Thus, we maintain the view that in order for sterling to weaken materially, the Bank of England has to deliver measures over and above market expectations, such as another round of asset purchases and/or a clear easing bias moving forward. As for the economic forecasts, we expect the bank to acknowledge that the highly uncertain environment is likely to continue weighing on growth, thereby lowering its forecast for near-term GDP. A notable upward revision to the CPI forecast is also likely, given that the depreciation of sterling is likely to lead to higher levels of inflation. As for today's indicators, we only get data from the US. Initial jobless claims for the week ended on the 29th of July are expected to have declined somewhat, something that would cause the 4-week moving average to rise. We also get the nation's factory orders for June, and the forecast is for the figure to have fallen faster than the previous month. Besides Governor Carney, we have one more speaker on today's agenda, Dallas Fed President Robert Kaplan. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.